On today's Hot Sheet, I'm discussing housing inventory for the past week, Realtor.com's hottest housing markets for 2024, the single family rental market report, and some headlines across the industry about the lawsuit settlement proposal. Today is Monday, March 18th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Welcome back to the Hot Sheet for real estate consultants and agents and real estate professionals across the landscape. A lot has changed since our Hot Sheet on Thursday morning, our last Hot Sheet of the week. Of course, if you are a real estate agent, I'm certain you haven't missed any of it. You've been informed from probably a variety of different voices, probably maybe even still a little bit confused or a lot of it confused. And I'll address some of that here at the end of the Hot Sheet. Of course, I did a live stream reaction video here on the channel. I think over 14,000 of you or somewhere in that time, somewhere in that number have already viewed that video living here in the live tab, the same tab on the YouTube channel that the Hot Sheet lives on. Of course, subscribe to the YouTube channel so you don't miss any of our breaking lives, as we do anytime there is breaking news in the real estate industry. But I will get into some thoughts that I do have, some further thoughts. Of course, there's a lot more coming, but I'm going to get into some of this here at the end of this Hot Sheet. But we want to keep the show in particular about what it's supposed to be about. That's a 24-hour look back on housing. And as we do every single Monday here on the Hot Sheet, we're going to take a look at inventory first, because that's what we're tracking most importantly to help make this market move more fluidly. Okay. Buyers are already faced with an unaffordable market, which makes all of the news from last week a little bit interesting for them. First-time home buyers might have taken the biggest kick to the chin, Shawn Michaels style, Heartbreak Kid. If you know that reference, let me know in the comments. But there's this inventory has been such a huge crunch. It's given them a unaffordable market for quite some time now. If we can get inventory to increase, we can get more options, obviously, on the market that comes with inventory, but just more of a fluid situation, more sales going up and creating more and more opportunities. So when we look back here at inventory, active inventory per Altos Research and Housing Wire for the last week, we see another jump. This is great news. 500,000 plus to 507,000 here in the last week. The same week last year experienced a slight uptick, just over 1,000 or closer to 2,000, I guess. But that jump was from 413,000 plus to almost 415,000. So in comparison, where we sit right now at 507 to last year at this time when we were at 415,000, that is a significant move up. Okay. Now, we did experience some more downwards trend in the coming weeks, and we bottomed out last year on April 14th before moving up really after the bulk of the spring market. We'll see what happens here. We're actually moving up into the spring market. Not nearly as dramatic of a steep decline on inventory, and we should break through that 600,000 line, which we didn't at all last year. We didn't do it at all in 2022. By the way, we didn't do it at all in 2021. So for the first time since really 2020, when inventory was on a straight free fall, I believe we'll break through this 600,000 line. If you just kind of look at the trends here of what happens, on the backside of the spring market into the summer and into the fall, we should see inventory break 600,000 again for the first time since that would be August of 2020. So huge welcome sign for buyers. The all-time inventory bottom happened in 2022 at 240,000. We're well above that. We're actually getting fairly close to the inventory peak of last year, which was 570,000 here at 507. We could break that by the end of the spring. Okay, active listings in 2015 were 982,000 for this week, and active listings in 2019, which I think is even a better indicator of a normal market, we're 822,000. So still well off of that mark of what many would consider a normal market. A normal market could also be defined as 6 months of inventory. You've got a very even buyer and seller market. We haven't seen that in quite some time. Of course, we've had sellers in control for, it seems like, ever, but it's been, about 4 or 5, really 5+ years, because even 2019, most markets in America, sellers were in full control. Okay, new listings, which can drive this inventory probably the fastest, came in at 59,542 for the last week. The same week last year was only 41,415. And by the way, we beat 2022, which was the number that I was really curious about, because we've been above here this year, albeit just 1 week at the end of January in comparison to 22. We've been above every single data point for the week of last year in new listings, much healthier than last year, and even above 2022 levels in almost every instance. And it's going to be interesting to see if this trend continues to follow the 2022 trend. As you can see, new listings in 22 in the chart in front of you, if you're on YouTube, were much more significant than those of last year. The trend from this point forward into August should continue to go up on new listings. Of course, most home sellers are home buyers, and they've got to feel comfortable with the 30-year fixed rate. The 30-year fixed rate crossed 7% again on Thursday and Friday of last week. Anytime we see that, we do typically see a slowdown in some of the new listings. But at this point, in particular, the markets, we covered this last week, the markets that are experiencing the most new listings, are they going to slow down? Be thinking Southwest Florida, those types of, the West Coast of Florida in particular, those areas, are they going to slow down? Or, is the trend going to continue where you keep seeing new listings? Price cut percentages, typically about a third of homes will have some type of price cut before they sell. Where are we with that? We're still below that typical third mark. We're at 31% right now for the past week. The past week last year was only at 30%. So now we have crossed over just by 1% from where we were last year. 2022, obviously an anomaly with price cuts at 17% during this particular week. Okay, so there's your inventory update for the week. Inventory continues to improve, and that is a good sign. If you want to improve everything in your business as a real estate sales professional, make sure you're in BAMX. It's how you get the most out of our content here at BAM. Of course, we don't have paywalls on our information like this. No paywall here, no paywall on our articles. We believe information should be delivered to you at your fingertips without having to jump through the hoops. But join BAMX for the how-to, for the courses each and every single month, for the live streams where we show you how to implement these things, the community, the show notes for this show, as well as the downloads for the show, all living inside of BAMX. Use code HOT to get 10% off of that. January's 2024 hottest housing market. Speaking of hot, defined by realtor.com. Here they are, the January 2024 top hottest housing markets. Rochester, New York, coming in at 1. Nashua, New Hampshire, Manchester, Nashua, New Hampshire, Springfield, Massachusetts, and Oshkosh, Wisconsin, and then Hartford, Connecticut make up your top 5. That's ranging from a median listing price of $247 for Rochester up to $565 for Manchester, New Hampshire area. Okay, and everywhere in between on that. Then you have Dayton, Ohio at 6, Norwich, New London, Connecticut, number 7. Never thought, by the way, Norwich, New London, Connecticut, that is where I am from. If you've ever been, don't be thinking Mystic. I'm not from the Mystic part. I am more of the Norwich variety, if you will. If you're familiar with those areas, the Norwich, New London metro is not a place I would have ever thought I'd be saying in the top 10 of hottest housing markets. Just a side note there. Akron, Ohio at 8. Lancaster, Pennsylvania tied for 8. So coming in, I guess, at 9. Trenton, New Jersey in at 10. You might be wondering how they define the hottest housing market. Realtor.com market hotness rate rankings take into account two aspects of the housing market: market demand, as measured by unique views per property on Realtor.com. Number two, the pace of the market is measured by the number of days a listing remains active on Realtor.com. So this is Realtor.com specific data. When we look at Realtor.com in comparison to the other portals, they are behind on the race with Zillow and even Homes.com. I mean, they've been debating that back and forth on how they both calculate the data and whatever. But Homes.com traffic is undeniably growing very quickly. Zillow's the leader in the pack. And so Realtor.com is really fighting for trying to get into that 2 position or keep that 2 position. So the data might be watered down a little bit based on how many active users they have on Realtor.com. I'll ask you, as a real estate agent, love to know in the live chat here, or if you're watching the replay, you can drop it into the comments later. What out of 10, is it 2 out of 10, 5 out of 10? What out of 10 buyers that you talk to? So anecdotal evidence here, just dropping it in individually. What percentage of buyers are coming through Realtor.com? Be interested to know. Realtor.com, I believe, in interesting position with everything last week, not because of the name. There's a little bit of a stigma there. You see Realtor in a headline, national Realtor. What is it? Is it a association? Is Realtor.com part? Is that, but also in an interesting position because their primary revenue source is certainly selling leads. Okay. So everybody that's selling leads in an interesting position, but if they're third on the traffic list and they're selling leads, maybe even a more interesting position there. I'm seeing some zeros. Wow. 1, 2, 3, 4, 5, 6 are saying 0 buyers coming through Realtor.com. If you ask somebody walks into an open house, I mean, you should always ask everybody in the open house, weave it into the conversation. Hey, just out of curiosity, how'd you hear about the open house? Love to see where you saw my marketing, right? So a lot of zeros there. 1 out of 3 in Cleveland. A few, not all are Z for Michael O'Connor. None for the Motherlode. So wow. Okay. Surprised to see so many 0 goose eggs there, and certainly maybe it's only because maybe you guys aren't doing any paid advertising with Realtor.com, but really when you talk to a buyer, they're going to be looking at one of those sites anyway. So the 0 is still, that's valuable insight there. That's interesting. Okay. So that would tell me, okay, to take some of the Realtor.com data with, a little bit of a watered down lens, I guess is how I would look at that. Columbus, Ohio, 11, Boston, and then Springfield, Illinois, Providence, Rockford, Illinois, Concord, New Hampshire, Allentown, New Jersey, New Haven, Milford area, Connecticut, Milwaukee, Wisconsin, Toledo, and Racine, Wisconsin. That is your top 20 there for hottest markets per the Realtor.com data. Here's the largest jumps in rankings. It's Vegas getting hot again, Phoenix, LA, Riverside, and Atlanta. So those are the markets moving up the hot factor for Realtor.com. Let's take a look at, and you can see here, this is actually, it's a great chart by Lance. So just staying on that for a second. You can see where the hottest markets are. It's like that Northeast, Midwest. The cooling is happening on the Sunbelt states significantly. The colder markets, the Texas, the Louisiana, Louisiana's the Florida, the Louisiana's, like there's more than one Louisiana, but those areas along that, certainly along the Gulf, really cooling down. You see the Northwest cooling down. Okay. Northeast, Midwest, pretty hot in comparison to the rest of the country. And then Southern California, pretty hot as well, as measured by realtor.com. So interesting there to see which markets are doing what. Now let's talk about single family rentals. Single family rentals have really done well, even despite some rental markets going down. An abundance of new inventory in the apartments. One of the reasons why you're seeing rents come down in certain parts of the country. But single families might be the one segment of the market that keep those rents up. When you look at the overall, single families are doing very well. People want to own, or I'm sorry, people want to own single family rentals, but people also want to rent. If you're a tenant, they prefer some of the folks prefer that single family environment. Certainly think folks with pets might get a better opportunity, yard, maybe fenced in, those types of things on a single family rental. Between 2023 and 2024, median 3-bedroom rents surpassed median single family home prices in 63% of analyzed markets, leading to a slight increase in rental yields. The average annual gross rental yield for 3-bedroom properties is projected to reach 7.55% in 2024, up from 7.39% in the previous year across 341 analyzed counties. Pretty good nugget there inside of the show notes to copy and paste if you're investor heavy, if you're targeting investors, if you have a lot of investors on your list. That gross rental yield going up might be some good data to share. Rental returns are on the rise across most of the nation, with potential annual gross rental yields for 3-bedroom properties increasing to 63% of counties compared to 2023. I'm going to go through these counties so you do get a look at that. Here are the 10 best single-family rental growth markets by county, according to Adam Data. You have Indian River, Florida there on the left, St. Louis City, Missouri, Cameron, Texas, Monroe, New York, Richmond, Georgia, Hidalgo, Texas, Collier, Florida. Collier is a county. These are all counties. Collier County is the county I am sitting in right now. Montgomery, Alabama, Jefferson, Alabama, and then Wayne, Michigan are making up the list for the 10 best single-family rental growth markets by county. Now, the county I'm sitting in right now, I would argue, is definitely heading down on rental prices. Still very high. And here are those percentages here. 14.6% Indian River, Florida, annual gross rental yield. 12.4. Okay, so for the yield, while rents are probably coming down in Collier County, the yield is still going to be significantly higher than other parts of the country. So I would agree with that. Okay. There you go on where you can get the biggest yield on your single family rents across the country right now. Okay. Let's take a look at some of the headline here, or one headline in particular for the real estate, the National Association of Realtors Commission lawsuit proposed settlement. Okay. You're going to see, and in particular, more important, doesn't matter what you see, you're here on the hot sheet, you know what you're doing. But your clients are going to see headlines like this. This is the second major headline that CNN has run since the news broke on Friday. Okay, so they had a 6% headline last week, said 6% is no more, right? And so this one published this morning. They're going to continue to publish this and pump this out. This is information that's going to continue to be spoken about. Here's the headline from CNN: the way Americans buy and sell homes is about to get turned on its head. So if you're a buyer or seller, you're clicking and saying, well, I'm about to buy or sell. What's going on? They talk about the lawsuit there at the top, and then the second paragraph down, the TLDR, which I had to ask Bobby what that meant. I guess CNN has, I don't know, some TikTok kids writing their content now, because I had to break this down. The too long, what is it?
Too long, don't read.
Too long, don't read. The too long, don't read from CNN. Way to go, CNN. The 6% commission split between buyers and seller brokers will no longer be the norm. Now, we know that these national headlines are getting this completely wrong. 6% isn't a norm, right? And so commissions are completely negotiable. To make a blanket statement that 6% is going across the, I know many markets that are 4. I know many markets that are, listen, and a market doesn't have a standard, but I'm just saying when you take a pool of commissions and you average them out, some markets might come to 4, some might come to 4.5, some might come to 5, some might come to 5.5, some might come to 6. Like, I mean, numbers are going to be all over the place. And so for CNN and others, I'm just using the CNN one because they've been very aggressive with their headlines. To take and say this 6% thing is no more, it's completely wrong. It's inaccurate. Um, Agent commissions are expected to fall in some cases dramatically because they will be competitive and negotiable, and sellers will be able to shop around for better rates and other broker tax credits in a competitive blah, blah, blah. All right. So just be aware of this. Number one, that this is in the language that consumers are reading. Okay. And so have an answer for that in your market. I don't know how you in particular do commissions, nor am I here to tell you how to do that, but have options of how people can personalize and customize, the not only your experience, but their fee experience and how you're going to negotiate a great package for their needs. One person's needs might be a little bit more extensive than the next, and there might be some difference in how those two commissions are customized for the individual. Okay. I'd be thinking about that. I'd be thinking about how I'm going to present that, certainly to the buyers and sellers right now who have questions of these headlines that they're seeing. There's no doubt going to be winners and losers. I 100% believe the folks that are consuming the hot sheet, that are part of BAMX, that are in the BAM community, are going to be on the winning side. There's a reason for that. I don't see really anybody inside of BAMX who doesn't treat this as a career, doesn't treat this as a full-time deal, doesn't treat this as a full commitment, all in on being the best real estate professional that they can be for their clients and that they can be in their market. I just don't have that experience with the folks that we're surrounding ourselves with here, and certainly inside of BAMX. And I think the agents on the other side of that have done this in their leftover time are going to be in a pretty precarious predicament. What do I mean by that? I talked to Sheila Reddy, CEO of Mosaic, recently. We did an interview here on this channel, and Sheila had a great line. Agents are going to have to do more with less. Okay. When you say do more with less, that also means more time, there's going to be more conversations, more work. They're going to have to get more out of less, maybe more transactions, more conversations up front with a buyer to not only articulate value, but build strategy in and move forward with that. And so if you have limited time for this business and things that just got a little bit more upfront on time, it might not be that attractive to those agents who are doing this spare time. Okay. If you have to work longer or more to get less, that's not going to be as attractive to people who are doing it with limited time or on part-time basis or whatever you want to call it. Okay. So there's opportunity there. There's also opportunity. Well, there might be opportunity with short sellers, by the way. I mean, geez, I'm still, just full disclosure, it's not financial advice. I'm still holding my back on Zillow like an idiot, on my Zillow stock, and Zillow got crushed on. Here's the 5-day chart. Zillow went down like over 10% on Friday's news, down 18% in the last 5 days. That's really all in that Friday time frame to today. So I'm down a cool 20% here on my Zillow stock right now. Kind of hate that. Market cap of Zillow went to 10.81 billion. But if we go to, let's see where it is today. So this is updated because we're live here on Monday at 9:55. Let's go to CoStar stock. Wow, CoStar's up again. They're about to crack $100. Wow. So the reason I'm bringing this up, okay, so, look at this. CoStar in the last 5 days is up 15%. They are now over a $40 billion market cap. That's incredible. So CoStar was worth 3 times what Zillow was, for the most part of the last, I'd say 3-4 years. You could always just say, hey, CoStar's 3 times the size. They're not 4 times the size of Zillow. So why do I even bring that up? Why do I bring up the active stock ticker? And we have the stock ticker obviously going on the bottom of the show, but here real time, what's the whether the stock's moving after the opening bell here? And you see CoStar pulling away from the pack, and you see Zillow and other stocks being pulled down off of this news. So the market believes, this is the market, that if your business model is wrapped up in buyer commissions, is centered around that, like a Zillow, your business revenue is centered around that, extreme vulnerabilities. If your business model that CoStar's, your listing, your lead, focused around the listing part of the deal, not vulnerable at all. In fact, in a strength position, up 15% in the last 2 days. This is what the market believes. This is what how investors now are digesting this news. We look at CNN headlines. Consumers are going to digest that in a particular way. We look at the market. Investors are digesting this in a particular way. I'd have talking points, obviously, for both. And I believe on Wednesday, we'll come out with the information later today. So, make sure you're on the BAM newsletter. If you're not, you're going to want to be on there for key updates. Nowbam.com, and the sign-in is right on the main page for the newsletter, or the Instagram or whatever. But we're going to announce at some point today that I believe on Wednesday, myself, Tom Toole, and Lisa Chinati are going to do a live stream going deeper on all of this, a knowledge brokers stream. Okay. So make sure you stay with us for that. Of course, I'll mention it here on the hot sheet as we lock in that time and date for all of you. Let's lock in where we're at on not to give you more bad news, but where we're at on 10-year, 4.32 on the 10-year treasury. And Bobby, if there's any interesting comments that you want me to address or any questions, I got a few minutes here before we got to jump. 10-year sitting at 4.32. So we're not getting any relief there right now. And 30-year fix coming in at 7.09 to finish the week on the daily read on Friday. So back up over 7. The weekly was down to 6.74. We'll see what happens here today. Probably a continuation of being up over 7% on that. Beth from Hadesburg, I think this has done and pulled the curtain back. All this has done is pulled the curtain back on commission, which we should have done ourselves. So Beth is saying, hey, I think reading between the lines here for Beth, it's like, hey, more transparency is a good thing. Beth, correct me if I'm wrong. I don't want to speak for you, but I'm just kind of taking this comment and saying where I think you're going with this. Hey, more transparency is a good thing. Those agents that were already acting in a full transparent world, really going detailed in explaining contract, really going detailed in explaining fees, not just of the real estate agent fee variety, but of escrow fee, of title fee, of conveyance tax fee, of repair fee. There's a lot of fees that go with buying and selling, for closing cost fees, that can really articulate line by line by line by line what the fees are going to be, instead of waiting for the title rep to do that on the day of closing, or waiting in an attorney state for the attorney to do that. I think what Beth's saying is, hey, the agents that have been doing that are articulate in that, are going to be in a great position moving forward and going to be fine. Correct me if I'm wrong, Beth. Brock Zevin, who's a coach and realtor and a visionary. I like that. What is the link on the 30-year fix, if you don't mind sharing? So this link that we use here is mortgagenewsdaily.com. This is the best link to use. Okay. You don't want to go and Google 30-year fix. You're going to get a really wacky number. I mean, this is the number that CNBC will source. They're going to have a daily survey. This is the daily survey that is reported to lenders across the country. They're also going to give you the 30 MAC 30-year fixed weekly. Okay, so that's an aggregate from 30-year from Freddie Mac each week. And then you're going to have a Mortgage Banker Association weekly. Okay, so you're going to have all the major categories in one place when you use mortgagenewsdaily.com. Okay. Definitely want to use that source and not other source. You don't even want to use a bank. Okay. A bank has got to put, or a bank sometimes will even put a lower fee. It gets very confusing. Or sometimes Google is a much higher fee because they don't want to get, in any hot water by advertising a lower fee. They're all over the place. Okay. You can see there on the stock ticker. I'm just looking at our stock ticker here. I mean, everything was down. Everything was down. I just want to do one last refresh of CoStar. My God, CoStar up 15%. Going to crack $100 more likely than not. Let's look at Redfin. Redfin down 3% more today. Down almost 20% in the past 5 days. Does Redfin survive? They're not protected. I don't believe in the settlement. Berkshire Hathaway Home Services, one of the other, about 500,000 agents not protected, still not protected. So Berkshire Hathaway Home Services is going to settle. So that's going to take care of that grouping. But there's still hundreds of thousands of agents not protected that NAR just said, can't afford you guys. It's like having a family, of 6 kids. And it's like, okay, I don't know, you guys are just too expensive. You're into soccer and dance and activities that we don't want to support anymore. We're going to feed these 4 kids and you two go play in the backyard and screw off. We're not going to pay for any of your stuff anymore. NAR literally told about a third of their members, go kick sand. See if your broker will settle. Remax and Anywhere and KW, they settled for their agents. Berkshire is going to settle for theirs. We're going to take care of the small shops and into medium-sized shops. And then the rest of you guys, screw off. Get lost. That's a whole nother topic. Anyways, that's your hot sheet for today. A little bit of, inside industry stuff there. Here's the deal, guys. There's going to be plenty of transactions moving forward. Probably more in the next 12 months than we've experienced in the last 18. So future's bright. You get great opportunity here for real estate professionals. I think for the first time ever, everybody kind of complains about agents that are doing it 10 or 12 hours a week. You're going to see a real career shift, a real dedication to being an extraordinary professional in this industry. And not to say that there's not extraordinary, there's always been extraordinary professionals. And unfortunately, there's been some that have pulled that down a little bit. I absolutely agree with what Sheila Reddy from Mosaic says, got to do more with less. And I'm excited for the future. I think you should be too. Don't get hyped up. Don't get emotional on this stuff. Emotions in business bring little to no value. I often tell agents, your emotions don't matter in this transaction. Your clients are already going to be emotional. By the way, their emotions, the buyer and the seller's emotions, are the reason, or one of the reasons, agents have such a prominent place in the transaction. You put buyers and sellers together without representation, it'd be emotional warfare. It would be end of the world type of collisions. Okay, using an extreme metaphor, but you get what I'm saying. When you know the emotions that go into both sides of this, attachment to home, stress of buying, you have nothing in between that. You just have, you get nothing done. Okay, so there's a lot of opportunity here moving forward. I think even more. I think agents sell more homes, more transactions moving forward. Certainly the ones that are in this community will do that. No question about it. All right. More to come here this week, obviously. Jennifer, I hope you're not talking about me with the ego comment, but that's fine if you are. No, I'm certain she's not. She's not. But thank you guys so much for the comments. Thank you for being a part of what we're doing here at BAM. Of course, use code HOT to get into BAMX, get 10% off. Actually, I think you can use, by the way, I think you can use code settlement and get even a bigger discount. Okay, settlement is 15%. You can use settlement right now and get 15% off of BAMX. My apologies. If you signed up in between me saying hot and settlement, email me byron@nowbam.com. We'll get it taken care of and get you the rest off. All right. Thank you guys so much. Talk to you soon. Talk to you tomorrow at 9:30 Eastern, 6:30 Pacific. You know the deal in between. Until then, toodaloo.